Right now, something important is happening. A chain of events is already in motion, and over the next 6 to 12 months, it could quietly cost the average household thousands of dollars. The strange part? Most people don't even realize it yet. They see gas prices going up, they notice groceries getting more expensive, maybe they check their investments and feel a bit uneasy. But they treat these as separate problems. They're not. It's the same problem, just showing up at different times. And the decisions you make in the next 60 to 90 days, not next year, not someday, right now, will determine whether you lose money or turn this moment into an opportunity. So, what's actually happening? A major global conflict disrupted one of the world's most important oil routes. And when oil is affected, everything else follows. First, fuel. You're already feeling this one. Gas prices have jumped fast. And for many households, that means hundreds of extra dollars this year. But this is just the beginning. Next, groceries. Higher fuel means higher transport costs, and that shows up in your food bill. In the next few weeks, you might notice your usual grocery total suddenly feels heavier. Not by a little, but enough to make you pause. Then, food supply. Fertilizer costs rise when energy prices go up. Farmers produce less, and that leads to higher prices later in the year. You won't feel it today, but you will feel it soon. After that, travel. Airlines face higher fuel costs, and ticket prices follow. Flights get more expensive, and they don't come down quickly. And finally, interest rates. Higher energy costs push inflation up. At the same time, the economy slows down, so rates stay high. That means expensive loans, high credit card interest, and delayed financial relief. Now here's the truth most people miss. All of this matters, but it's not what will cost you the most. Your reaction will. Imagine two people. Same income, same investments, but when the market drops, one panics, stops investing, waits for things to feel safe again. The other does nothing different, keeps investing, stays consistent. Years later, the difference between them is massive. Not because one was smarter, but because one stayed disciplined while the other reacted. Studies show something powerful. Missing just a few of the best days in the market can cut your returns in half. And those best days usually happen right after the worst ones. So if you step out, you miss the recovery. This is where most people lose, not because the market failed them, but because fear made their decisions. So what should you actually do? Focus on what you can control. Build an emergency fund. Pay off high-interest debt. Keep investing consistently. Adjust your spending early. And most importantly, don't let fear take over. Every major downturn in history followed the same pattern. Prices fall, fear rises, most people pull back. But a few stay consistent. And when the market recovers, they're the ones ahead. Right now, we are in that moment. Uncertainty is high. Prices are moving. Headlines are loud. But this is also when wealth is quietly built. At the end of the day, it's not about predicting the market. It's about controlling your behavior. Because success isn't about intelligence or income. It's about staying consistent when things feel uncertain. The waves are coming. Fuel, food, travel, higher costs. You can't stop them, but you can choose how you respond. And that choice will shape your financial future.